Good afternoon. I'm Jo Russell, Head of Investor Relations at Haleon. Thank you for joining us today for our Capital Markets Day. Members of the Haleon executive team and across the wider business are excited to share more details on the next phase of our journey. Before we commence, I'd like to cover a few housekeeping items. Our presenters will take around 3 hours, 2 breaks scheduled at appropriate intervals. We'll also have breakout sessions in the middle of the afternoon. There will be videos available for those online to watch. We'll have a Q&A session at the end of all the presentations, and you'll be able to ask questions via the online platform. After today's event, all presentations and webcasts will be available on the investor section of haleon.com. Before we commence, I'd just like to remind people in the room and listeners on the call that in the discussions today, the company may make certain forward-looking statements, including those that refer to our estimates, plans, saves and expectations. Please refer to this morning's announcement and the UK's SEC filings for more details, including factors that could lead to actual results to differ materially from those expressed in or implied by any such forward-looking statements. And with that, I'll hand over to Brian McNamara, the CEO of Haleon.
Great. Hello, everybody, and thank you for joining us today. It's great to see so many people in the room live in London, and I want to welcome everybody who's joining us online. So you have seen that yesterday we published our Q1 results. It gave you a sense of the dynamics we're facing in 2025. We confirmed our 2025 guidance as we manage in a challenging and uncertain economic environment. But today is very much about the future and unlocking the full potential of Haleon. We successfully transitioned out of a pharma company, and we're now transitioning the business to become a world-class consumer company. We've made great progress, but it's very clear there's a lot more for us to go after. But first, let's ground ourselves in where we are today, starting with what we've achieved over the last 3 years. It starts with our fantastic portfolio of leading brands in resilient and growing categories, like oral health, vitamins, minerals, and supplements, pain relief, respiratory health, and digestive health. And that portfolio, combined with our capabilities in expert engagement, innovation, and route to market, has helped us deliver on the commitments we set out in 2022 and more. We've consistently delivered at or above our 4 to 6% organic revenue growth guidance, and importantly, generated positive volume mix every year, which was underpinned by strong market share gains. We've expanded our operating margin at constant currency and delivered strong cash flow, which has allowed us to reduce our leverage to 2.8 times by the end of 2024. And we've also optimized our portfolio. We've done that by divesting non-core brands and investing in high-growth markets like China, where we've entered into an agreement to take 100% control of our OTC business. And finally, we started life with a 45% overhang in our shares. Today, that's down to 0. Enabling us to create a strong institutional investor base. In short, we've delivered on the commitments we made 3 years ago. We've established strong foundations for Haleon as a standalone company. I'm incredibly pleased with where we're at today. As we continue to transform Haleon into a world-class consumer company, it's clear there's so much more for us to unlock. three separate areas where I see the greatest opportunity. First is growth and our continued confidence in delivering 4 to 6% annual organic revenue growth. The second is productivity and unlocking a significant gross margin opportunity through optimizing our supply chain, allowing us to deliver operating leverage more consistently to the bottom line. And third is culture and continuing to evolve Haleon into a more agile, performance-focused consumer company. First, let's look at growth. I'll start with some context. We're a company 100% focused on consumer health, an attractive and extremely relevant sector that's worth about 200 billion pounds today. We're in growing and resilient categories, which are benefiting from favorable long-term macro trends. Talking about things like continued focus on health and wellness, the long-term shift towards aging populations, and a growing middle class. And with these trends, we're expecting the categories we operate in to grow at about 3 to 4% a year. Today, we reach about 1.5 billion people out of a global population of 8 billion, representing a significant opportunity for us. Over the past 3 years, we've strengthened our individual category strategies, and now we're much clearer on the headroom for growth across those categories, making us even more confident in delivering sustainable 4 to 6% annual organic revenue growth. We can see the potential to better leverage our global footprint, scale our innovations, and capitalize on the strength and breadth of our portfolio, going beyond our historic emphasis we've had on power brands. So here we see 3 opportunities to go after. The first, closing the incident versus treatment gap across our categories. Take oral health, for example. Where only 1/3 of people who suffer from tooth sensitivity actually treat their symptoms. And pain relief, where today, around 4 out of 10 pain occasions are not addressed. Second is innovation-led premiumization through providing meaningful benefits and better health outcomes for consumers. Otrivin Nasal Mist is a good example here, and we'll touch on that later today, as is our new Sensodyne clinical range. Third, driving penetration among lower-income consumers. By that, I mean all consumer groups outside the highest income bracket. We believe that we're uniquely positioned to deliver on the needs of these lower-income consumers. Today, we're significantly underpenetrated with this population, with our market share less than half that of higher-income consumers. Now, the second opportunity is increased gross margin. We'll do that through developing a more efficient and agile supply chain. The reality is today, our supply chain is the combination of 3 separate pharma supply chains. Now, that comes with a very strong heritage in quality, compliance, and scientific excellence, all things that are very important to us and will continue. But with that heritage comes a lot of unnecessary complexity and inefficiency built into our supply chain. So we see a real unlock in radically simplifying our current portfolio. We'll do this by reducing the number of packaging variations, the number of formulations, and ultimately significantly reducing our number of SKUs. That will allow us to drive more efficient and effective operations in our plants, which in turn gives us the ability to better leverage scale in procurement and drive significant savings. There's also a real opportunity to evolve our manufacturing footprint. First, we'll consolidate and simplify our third-party network. And second, we'll evolve our internal network to support the future shape of the business, including strengthening our presence in key markets like India and China. These initiatives will realize 800 million pounds in gross supply chain savings, over 5 years. And in turn, these savings will significantly contribute to 50 to 80 basis points of adjusted gross margin improvement per annum. And that gross margin improvement, alongside with operating leverage, provides us with the capacity to invest in the business and also gives us confidence to upgrade our guidance to high single-digit adjusted operating profit growth at constant currency. And the final opportunity is to continue to transform Haleon into a more agile, performance-focused consumer company. When we separated, we cloned and copied the processes and systems across to Haleon. That was the right thing to do from a business continuity perspective. And those systems and processes were right for a pharma company, but not for a consumer company. So we've made good progress over the last couple years. We've done a number of things, including evolving our processes and simplifying the way we do things, reshaping the company and upgrading the talent across the organization, including at the leadership team level. But we still have a lot more to go after in terms of the shift here, and we have a clear plan in place to deliver it. That includes driving a culture shift within the organization, becoming more agile, performance-focused company. We're doing this in a number of ways, not least through directly linking employee remuneration to key financial metrics, as well as individual performance. We're also streamlining and simplifying our operating model and continuing to expand our business services footprint, support our growth and productivity agenda. And we're making good progress here. So I've talked about through the opportunities ahead look like. Now let's look at how we're going to go after that opportunity, which we'll do through our Win as One strategy. Our Win as One strategy is all about raising the ambition and realizing the full potential of the company. It's how we're mobilizing and driving the organization relentlessly and consistently forward to capture the opportunities we see ahead. There's 4 elements to the strategy, all designed to work together and reinforce each other. Starting with our purpose, to deliver better everyday health with humanity. It's the impact we want to create for our consumers around the world. To deliver our purpose, we define 2 ambitions: to provide everyone at Haleon with a North Star and guide us in everything we do. They capture both the growth opportunity I've just talked about, as well as our consistent commitment to maximizing shareholder value. The 2 ambitions are to reach 1 billion more consumers by 2030 and to generate industry-leading shareholder returns. And then we've aligned the entire organization around a set of strategic drivers to support these ambitions. I'll take each of these in turn. First, health in more hands. This is all about unlocking the significant headroom within our categories. It's about driving penetration and closing the incident versus treatment gap I talked about earlier. It's about driving innovation-led premiumization as well as penetration among lower-income consumers. Second, superior brands. This is about leveraging our category footprint, scaling our innovations, and capitalizing on the strength and breadth of our brand portfolio. Our new clinical platform for Sensodyne is a great example of what we're doing to attract new consumers and drive premium offerings. Third, wired for excellence, driving efficiency and productivity across the entire value chain. A key part of that is the unlock within our supply chain, which I talked about earlier. And finally, full potential people, unlocking the potential of our people to deliver on our ambitions and cultivate a culture that gives us a genuine competitive advantage. And then we've defined a set of 4 behaviors that we've embedded in the organization. I'll let some of our people explain what they are.
Consumer first always. To me, it's about putting the consumer at the heart of every decision. When we see the world through their eyes, we unlock real value, and when we answer to their needs, we unlock growth for everyone.
Collaborate for Impact is about building strong relationships that drive us towards our purpose and objective. It's about working together to create meaningful change.
Unlocking value at pace is making well-informed, fast decisions and then executing, learning, and keeping on improving.
To me, grow myself and others means that we are consistently challenging each other to learn, to develop, and really to encourage each other to do the same so that we can be at our full potential.
And of course, in line with our purpose, our responsible business agenda is woven into every element of our strategy. Now, I'd like to spend a minute talking about how this translates into our value creation algorithm, which Dawn will talk through in more detail later. First, our algorithm starts with the confidence in our medium-term target of 4 to 6% annual organic revenue growth. Second, the substantial gross margin opportunity creates significant financial flexibility, which means that we're upgrading our guidance to high single-digit adjusted operating profit growth at constant currency. And that strong operating profit growth, along with improvements in working capital, will drive strong cash flow generation. Combined with disciplined capital allocation, this will drive strong EPS growth, enabling us to achieve our ambition of generating industry-leading shareholder returns. Over the course of the next couple hours, Tamara and Frank will take you through the headroom we see for growth across our categories. They'll also talk you through a couple of examples to show you how we're driving health in more hands through our superior brands. Filippo will focus on our route-to-market capabilities and our strength in the pharmacy channel as we take our superior brands to consumers. You'll then go through a series of breakouts where we'll bring to life the execution of our category strategies in market. After that, Namrata will take you through our supply chain opportunity, a key part of our Wired for Excellence strategic driver. She'll also update on our responsible business agenda. And then, before I'll come back and bring it all together, you'll hear from Dawn, who will take you in more detail through our value creation algorithm. But before I hand over to Tamara and Frank, I'll leave you with the key messages I want you to take away from today. We have a clear strategy to drive growth across our attractive and resilient categories. We're unlocking the opportunity in our supply chain to reinvest in the business and deliver strong gross margin. And we're continuing to transform Haleon into a more agile, performance-focused consumer company. All that underpins my confidence in delivering our value creation algorithm. Thank you, and now I'll turn it over to Tamara and Frank.